What's up, good people? It's yours truly, Natasha Varela, your favorite tax strategist. So I want to talk about a lot of mistakes business owners make, or a lot of things that they overlook. And when I say business owners, I mean non-wage earners. That could be your gig workers, that could be your business owners. You can call yourself self-employed, you can be a 1099 worker, whatever you want to call it, content creator, all of that. These are all non-wage earning activities and can be construed based upon your participation as a business activity, right? Based upon your intent to make profit. These are all legitimate, non-wage earning activities. So what are some things that business owners tend to overlook? If you're making a significant amount of profit in your business, please look into whether it's time for you to designate S Corp status, right? Because if you stay as an LLC, whether you're a single member or a multi-member, you could be paying what I call the sunk cost of self-employment tax, right? You can't deduct self-employment tax. It doesn't really reduce your business's taxable income. It's just a cost you pay. And there's nothing really you can do about it, right? But if you designate S Corp, that means you're making a good amount of money and you can afford as the owner of the business, right? If you're an LLC, you are called a member. You can designate S Corp and then become what you call a shareholder, right? You go from member to shareholder. It doesn't matter. You're still the owner of the business. And now you have to pay yourself what we call a reasonable salary. That means if you're making a good amount of money, right? You're bringing in a good amount of income. You can designate a portion of that towards what we call officers' compensation. How do you know what's reasonable? You compare it to other businesses like yours in your industry with similar sales, right? And you can do this a myriad of ways. I teach you in the mastermind. We use BizStats, BIZSTATS, to determine what a reasonable salary would look like for your business with your sales as an S Corp, okay? You would be paying yourself as the owner a salary. Your salary now reduces your business's taxable income. You avoid self-employment tax legally. Okay, and any employer taxes you pay also are tax deductible. They reduce your business's taxable income. Another item a lot of business owners miss, particularly my parents out there or my aunties and uncles, grandmas and grandpas, whatever have you, paying your children to work in your business. It's possible, right? And it's legal. There's a whole page dedicated to hiring your children, paying your children on the IRS website. So it is a thing. I'm a former examiner in the large business and international division of the IRS. I can't tell you how many times on the schedule of officers, 1125E, I've seen a bunch of people with the same last names. Except now you, as a smaller business owner, can pay your children, right? There are laws, right? The U.S. Department of Labor and your state Department of Labor that governs, how you hire your children. But either way, the job has to be bona fide. It has to make sense, right? You can't make, Junior a CEO and paying $500,000 salary. It has to make sense and the compensation has to be reasonable. So what the strategy is for most smaller business owners is for them to pay their teen or tweens up to the standard deduction for every year. This way they avoid self-employment tax via a 1099, right? You got to put them on payroll. And that non-taxed income, right? That untaxed federal income, they still pay, Medicare and Social Security. But the untaxed federal income now can be used to open up a Roth really early. I mean, imagine your 13-year-old opening up a Roth and starting from that age and contributing every year with untaxed funds. Those funds, that salary also reduces your business's taxable income. Now, again, they have to be on payroll. It can't be a 1099, otherwise they're going to pay self-employment tax, okay? Has to be on payroll, hire a payroll company. It's really, really easy. Last but not least, my favorite, a lot of business owners are not contributing to a retirement plan. This is probably one of the best strategies you can as a business owner use to reduce your taxable income for your business, but also it's tax deferred and you get to build your retirement plan much faster than an employer sponsored plan, right? Because every year what we call a SEP IRA or a solo 401k, these are common business owner retirement plans. You're allowed to contribute up to, not to max out the annual limit, but it's usually 3 times more than your employer sponsored plan. So for 2025, it's $70,000. So imagine being able to contribute up to $70,000. into your retirement plan, tax deferred. Again, there's limits. So it's 25% of compensation. Okay. Not to exceed every year's limit. This year for 2025, it's 70,000. Okay. So if you're an S Corp, it will be 25% of your compensation, not to exceed 70,000. If you are an LLC, the 25% will be your net profits, right? Your income minus your expenses. Okay. And that number you will use as your 25%, not to exceed the annual limit. So those are some common, items that business owners, or should I say non-wage earners, miss. And also, most importantly, just because you don't consider yourself a business owner, maybe you engage in non-wage earning activities. Content creators don't call themselves business owners for the most part. Maybe 1099 people don't call themselves business owners. They're still non-wage earning activities. So you're still eligible to take expenses that are aligned with those non-wage earning activities. So as long as your intent is to make profit, right? And you operate in a business-like manner. So if you want to learn more, go ahead and join the Tax Strategies Mastermind, or go on my YouTube. My last free live training is on there, or you can sign up for my next free live training. Link is usually in the bio. But go ahead either way and get some more information. Subscribe to my YouTube either way. So I'll see you guys later.